Great to have you join us. I'm Ladi Williams. Let's start off with major markets in Africa where positive sentiment reigned at intraday. The all-share index of the NGX entered the 44,000 points, gaining 0.41%. Hopefully, it sustains this till the close of trade. JSE of South Africa did much better with almost 1% gain at 74,365 points. Egypt's EGX 30, the gain was quite less, the marginal 0.03% at over 12,000 points. While Kenya closed on the flip side yesterday, it shed over 2% at the close of trade. While in the Middle East, it was more of negative sentiment. Abu Dhabi shed over 1%. Similar sentiment in Dubai, but the loss was slightly lower at 0.76%. Saudi Arabia was on the positive side, and intraday, the all-share index was up 0.82%, while the Qatari index lost marginally at intraday. And to Europe now, let's look at some corporate rivalry, as Airbus just revealed it smashed Boeing in terms of planes sold last year, having only overtaken the American firm a couple of years ago. We see sales of jets are growing, as well as luxury car sales, with Rolls-Royce selling record numbers last year. Let's hear more now from Rob Watts right there in Berlin. Great to have you, Rob. Well, it's one of the big global corporate rivalries. What's the latest on America's Boeing versus Europe's Airbus?
Well, we've just had figures for 2021 from Airbus, and they reveal the company delivered over 600 of its passenger jets to customers last year. Now, given that Boeing only delivered around 300 in the first 11 months of 2021, it's clear that Airbus did outperform its American rival last year, and probably by some distance. It's actually the third year in a row that Airbus has been the world's biggest supplier of passenger jets, after Boeing really dominated the previous decade. This change in fortunes is perhaps more down to setbacks at Boeing than success at Airbus. Boeing is still recovering from, for example, the disastrous grounding of its workhorse 737 MAX model following two fatal crashes. That has obviously hit deliveries, but the MAX has returned to the skies and orders are now coming in. However, Boeing has also seen a series of snags affecting deliveries of its 787 Dreamliner too. Now, these problems together have all helped Airbus to hold on to the top spot.
But what do the figures, from Airbus tell us about the state of global air travel?
Well, a key stat is that Airbus delivered 8% more planes last year than it did in 2020, 8%. So that shows you the direction of travel. Demand for new aircraft is growing as airlines become just a bit more confident about the future. Airbus also received a net 500 orders for planes last year. The return of the 737 MAX means Boeing is also expected to at least match Airbus for orders. It just received one 450 MAXes from US airline Allegiant. The momentum in aerospace is expected to continue into 2022 as well. Airbus has booked orders from Air France-KLM and Australia's Qantas already. Worth keeping an eye on also this year is the boom in sales of freight planes, thanks to snarl-ups in global shipping caused by the pandemic. Airbus has just booked the first orders for its new A350 freighter, but for now, Boeing is actually dominating that aspect of the market.
And plane sales are growing, so as luxury car sales. What are you hearing from Rolls-Royce?
Well, the famous British brand, which is actually owned by Germany's BMW, sold more cars than at any other time in its 117-year history last year. Sales of Rolls-Royces surged 50% in 2021 to over 5,500 cars. The company set records in most regions of the world, including the Americas, Asia Pacific and China. Its most popular model was the Ghost Coupe, which has a price tag of 350,000 euros, or around 400,000 US dollars, so it's not cheap. Record sales for Rolls-Royce and for BMW do buck the trend for car markets in general. I mean, in Britain, for example, where Rolls-Royces are made, car production remains almost a third below pre-pandemic levels. But the pandemic has seen people shelling out more for cars as they become harder to come by because of the global semiconductor shortage, and people make extra use of the extra disposable income they've built over the past couple of years. So it's proven that 2021 was a good year for the top-end cars.
All right, that was Rob Watts right there in Berlin. Thank you so much, Rob. Moving on now, we see Asia-Pacific markets mostly fell as investors remain concerned about inflation, as well as likely policy tightening from central banks such as the U.S. Federal Reserve. Japan's Nikkei 225 declined 0.9% to 28,222 points, while the Topix index fell 0.44% to 1,986 points. The Japanese market was closed in the previous session for a public holiday. South Korea's Kospi wavered between gains and losses before finishing near flat at 2,927 points. The Kosdaq struggled and declined 1.07% to 969.92 points. In Hong Kong, the Hang Seng Index finished fractionally lower at 23,739 points. Chinese mainland shares lost momentum and major indexes slipped. The Shenzhen components dropped 1.27% to 14,223 points, while the Shanghai composite was down 0.73% at 3,567 points. Elsewhere, the ASX 200 in Australia fell 0.77% to 7,390 points. And U.S. stocks were flat in early trade after major averages extended declines until the Nasdaq rallied to snap a four-day losing streak. Futures tied to the Dow Jones Industrial Average fell 4 points of 0.45%. S&P 500 futures edged lower at 0.14%. And we see the Nasdaq 100 futures there rising marginally 0.05%. In regular trading on Monday, the Nasdaq turned slightly green into the close after a day of continued declines from previous week's sell-off, sparked by a rate in bond yields and worries about upcoming actions by the Federal Reserve. It closed 0.05% higher and erasing a 2.7% loss. Meanwhile, the Dow lost 162 points, while the S&P 500 slid 0.1%. Stocks remained under pressure as bond yields continued to rise. Monday, the 10-year U.S. Treasury yield rose to 1.8% after ending 2021 at 1.5%. All right, let's look at what's happening in the oil market now. We see oil rose towards $82 a barrel today, supported by tight supply and hopes that rising coronavirus cases and the spread of the Omicron variant will not derail a global demand recovery. Brent crude futures gained 40 cents to $81.27 a barrel, to dropping 1% in the previous session. West Texas Intermediate crude futures rose 52 cents to $78.75 a barrel after falling 0.8% on Monday. A weaker U.S. dollar helped support oil prices as it makes oil cheaper for those holding other currencies. The U.S. Senate committee holds hearing this week for Federal Reserve Chair Jerome Powell and Vice Chair nominee Bernard that could provide new details about the U.S. Central Bank's plans to tighten monetary policy. And gold prices rose, supported by a weaker U.S. dollar and Treasury yields as traders awaited December inflation data and weighed bets for quicker interest rates hikes. Spot gold rose 0.3% to $1,805 per ounce. U.S. gold futures were up 0.4% to $1,805. The yield on 10-year Treasury notes inched away from an almost two-year high of 1.80% to 1.77%. Gold is considered a hedge against high inflation, but the metal is highly sensitive to rising U.S. interest rates, which increase the opportunity cost of holding non-yielding bullion. All right, and we see Africa's first ever deep sea floating liquefied natural gas facility has entered Mozambican waters, marking a major milestone ahead of imminent production from an offshore gas field. Measuring 432 meters long and 66 meters wide with about 220,000 tons and with a capacity to liquefy 3.37 million tons of natural gas per year. Project is expected to be the first of its kind in Africa. It will be located in the Rovuma Basin offshore Mozambique. The plant is critical to the $7 billion Coral South project, which is operated by Italian oil and gas company Eni. They will produce gas extracted from the southern part of the field. And Egypt's bond market is currently the favorite of emerging market where investors, they're counting on another year of big gains in 2022 after a stellar performance in 2021. JP Morgan Chase and Co will add Egypt to a group of bond indexes this month, setting the market up to receive an influx of cash from passive money managers. Investors have already been enticed by Egypt's hefty interest rates, which rank as the highest in the world after adjusting for inflation. The global bond markets reeling from losses as the Federal Reserve turns hawkish. Egypt is looking like a bright spot for investors. Local bonds have returned 2% since December, making it one of only a handful of emerging markets that's delivered positive performance. Analysts expect this strong performance to continue and predict double-digit gains in 2022, adding to last year's 13% return, which was the second best in the world and compared with an average loss of 1.2% for local emerging markets debt. And Egypt's year-on-year core inflation surged to 6% in December from 5.8% in November. Central Bank said in a statement, month-on-month inflation recorded 0.2% in December 2021 compared to 0% in the same month of an earlier year and to 0.5% in November 2021. You see, core inflation strips out volatile items like food. Headline inflation, monthly headline urban CPI inflation recorded a negative 0.1% in December 2021 compared to a negative 0.4% in the same month of the previous year and to 0.1% in November 2021. According to the latest report published by the country's statistics agency, accordingly, the annual headline inflation rate recorded 5.9% in December compared to 5.6% in November. And we see that Kenya has suspended all inbound and transit passenger flights from the United Arab Emirates to retaliate against a move by Dubai to ban all passenger flights from Kenya over fake COVID tests. Kenya Civil Aviation Authority Director General told the nation that Africa Tuesday that the suspension took effect Monday midnight for a period of 7 days. Ban does not, however, affect cargo flights that are normally flown by carriers such as Kenya Airways and Emirates Airline from UAE into Kenya. The ban comes barely a few days after UAE extended Kenya flight ban after it established that travelers from Nairobi were testing positive for COVID-19 after arrival in the Middle East nation despite carrying negative test results. Before we head on to the commodities market, let's hear from Juliana now, right there in the UK. Great to have you, Juliana. Well, findings from recruitment consultancy Robert Walters show lawyers could be set for inflation-busting pay rises this year as firms, desperately try to hold on to top talent. Tell us more about this.
Yeah, this interesting data from Robert Walters. As you said, they're a specialist professional recruitment group looking at those in society that are on top tier salaries, anything above £100,000 a year. And they've just released their trading update showing that they've had a bumper 2021. It's not just them, really, for lots of specialist recruitment firms across the world. It has been a good year because we know that the labour market is robust. Here in the UK, there are over 1 million vacancies. But at the very, very top for specific specialised skills, it is really tough. So a lot of big firms in the UK are competing to try and retain some of their top talent. Last year was called the year of resignation. A lot of people feeling like, they're not being well looked after by their employers, so they were shutting up shop. But it does mean that there is an inflation surge around pay rises. A lot of junior lawyers are coming into firms earning way above £100,000 a year. Some recruiter employers are having to pay upwards of £120,000, £130,000 just to attract people. So if you're a lawyer and you're watching, now's the time to roll out your CV.
All right, maybe I'll just take a quick course there and see if I can get one of those. Anyway, UK retailers posted strong sales last month as shoppers splashed out on bumper Christmas celebrations, despite the surge in COVID-19 cases. I guess shoppers shopped regardless.
Yeah, they did. It's some good news for the UK high street that we know has been embattled over the past couple of years, even before COVID. But the latest data released at midnight from the British Retail Consortium shows that in December, retail sales grew 2.1%. Over the year, it's grown 9.9%. So it does show that finally customers are coming back in. The festive period, obviously the most important period for retailers. That's the time of the year where they kind of reap back all of their lost earnings. And it was a good month for them, and it was better than pre-pandemic times. So pre-pandemic, we're talking December 2019. However, of course, there's always a warning amidst COVID. There are concerns, especially here in the UK, because of the cost of living, rising inflation, currently at 5.2%. The squeeze coming in with the cost of energy bills going to be lifted in April, that perhaps the kind of numbers we were seeing last year won't be repeated again this year. But never say never. We'll just have to wait and see.
All right, wait and see that. How are the markets looking at intraday?
Yeah, pretty good. Yesterday there were losses. The blue chips have gained back some of those losses yesterday. At intraday, the all share is up 0.55%. The FTSE 100 is up by 0.53%. And the FTSE 250 is up by 0.72%. In the currencies market, the British pound is up on the US dollar by 0.21%, also up on the euro by 0.19%, and down on the Japanese yen by 0.40%. I was discussing this morning, Laddie, with Innie on Business Morning about Heathrow and the fact that Britain's busiest airport has had its worst year ever in 2021 with passenger numbers. That really had a knock-on effect on the travel and leisure-related stock, all trading down at intraday, including Wizz Air, EasyJet Holdings, IAG, the parent company of British Airways. So not great news once again for the travel-related industry.
Yeah, as usual, travel stocks getting plummeted there. All right, Juliana, thank you so much for that update, and enjoy the rest of your day.
Thanks, Laddie.
All right, let's see what's happening in the commodities space now. We see, according to Financial Times, extreme weather events triggered spikes in global agricultural commodity prices. Brazilian coffee, Belgian potatoes, and Canadian yellow peas all rose sharply due to extreme temperatures and flooding. They are also forecasting that this trend will continue into 2022. Well, let's talk to Lawrence Messina, analyst with Financial Derivatives Company. Great to have you, Lawrence.
Thank you for having me.
Yeah, so how would this affect Nigeria's ambitions to be self-sufficient, in food production, especially the president, saying that we produce what we consume and consume what we produce?
I believe this is a huge setback to Nigeria's ambitions with regarding self-sufficiency in food production. My reason for saying this is largely due to the fact that we're experiencing some large challenges in food production currently, ranging from old farming techniques to lack of investment, lack of research, and then you also have the issue of logistics and increasing costs and lack of storage. But one thing is common to all of these problems. They are all man-made problems which can be solved with proper planning. So when you factor in climatic conditions, which are, as you would call, acts of God, it's way harder to ward off or hedge against this. It's not impossible, but I will say it will take Nigeria a couple steps back in terms of achieving full self-sufficiency in food production.
All right, another issue now, inflation. You see Nigeria's official inflation has maintained a downward trend for 8 consecutive months. FDC is projecting a further fall to about 14.9%. Since some of the key ingredients for food manufacturing are imported, how realistic is it for us to assume that, prices will fall? Or are there doubts about the integrity of the data here?
Well, based on theory, based on expectation, based on analysis, I mean, you would largely say it is highly unrealistic that prices will fall as we go into 2022. And this is largely because of a lot of factors. I mean, current factors like the exchange rate, which in the parallel market is ranging between 560 to 570, that imposes a lot of costs on people that are importing goods into the country. And let's not forget the added cost in terms of tariffs, in terms of logistics, transportation, and also the wastage that goes along with transporting items from one location in the country to another, which is also fueling shortage and price increase. So when you add the climatic conditions that are happening in the international market, and then the impact of the exchange rate as well. So we're seeing two pass-through effects, the exchange rate pass-through effect, and also the inflationary pass-through effect of the foreign market. So, I mean, to see a price decrease in the coming months would be largely unrealistic and optimistic, if I'm being sincere.
Maybe a miracle, maybe, just maybe. Well, considering that subsidy removal is imminent and external, climatic conditions are likely to remain unfavorable, food prices can only trend in one direction, as you said, upward. Is there a way out of this for Nigerians?
Well, it's going to be tough. You could say it's bleak, but it's not impossible. Like I said, climatic conditions, they can be warned off against, but these are long-term projections. I mean, everywhere you see climate goals, they are usually 10 steps ahead, like the Project 2030 or net emissions by 2030. So I believe it's important that we start looking at initiatives to reduce emissions that can stabilize temperatures. But however, this is just a long-term project. In the short and medium term, it's important to actually face the current issues surrounding the agricultural ecosystem, because once these issues are solved, then we can now know that, okay, we're just warding off against climatic conditions. So what do I mean by warding off against agricultural issues in the ecosystem? This is quite simple. Basically, there's the agricultural ecosystem and there's the larger ecosystem, right? So in the agricultural sector, we need to ensure quite a four-pronged approach, in my opinion. We're talking about research. Research gives us an idea of what crops to plant, what's compatible with our soil. It also tells us new practices in farming, cross-pollination that can create resistant varieties. And then we talk about investments and trainings, which will also train the farmers on how to use new equipment and also purchasing this new equipment, and then implementation. All of this just helps the agricultural sector. And then the overall ecosystem, transportation, storage, preservation, they need to work. Once all these issues are solved, then we know that cost will be reduced.
All right, Lawrence, I guess it's the same old problems and solutions. All right, Lawrence, thank you so much. Lawrence is a financial analyst at Financial Derivatives Company. Thank you so much for coming on the program.
Thank you.
All right, on that note, that's the end of Business Incorporated today. Thank you so much for watching. I'm Ladi Williams. Bye for now.